world is changing fast. New technologies are impacting how we think about products, services, and the way we live our lives. Nowhere is this trend more present than in financial services, where new business models and customer expectations are changing our conceptions about banking, finance, and the very nature of money. Welcome to Rebank, a visionary podcast about banking, fintech, and the future. The future of banking is here. Hello and welcome to Rebank. I'm your host, Will Beeson. Today we're thrilled to be joined by Erin Platts and Kristi Oliver. Erin is head of UK commercial banking at Silicon Valley Bank, and Kristi is a managing director in the same business. Silicon Valley Bank is one of the best-known banks in the startup community, banking many of the most successful tech companies and VCs in the US and UK. This episode is composed of two parts. In the first interview, we'll hear from Erin about SVB's pedigree and broad strategy. In the second interview, Kristi goes into detail about SVB's view on fintech and funding options for startups, including what venture debt is and how it works. As always, connect with us on Twitter, Facebook, LinkedIn, or on our website at bankingthefuture.com. If you like today's show, please subscribe on iTunes or your podcast platform of choice and leave us a review. Thank you very much for joining us today. Please welcome Erin Platts and Kristi Oliver. Erin, welcome to Rebank.
Thank you. Thanks for having me.
We're sitting in a Silicon Valley Bank office in central London, which sounds funny to say. What are you guys doing so far from home? How long have you been here? What sort of work do you guys do?
Yeah, so we've actually been in London in the UK for well over 10 years now. So we started our office, I think it was back in 2005 or 2006, and what we were finding at the time is so many of our US clients were asking us for help moving to the UK. A lot of our venture capital and private equity clients were looking at investments in Europe. So we thought we should set up shop, and thank goodness we did. So we've been here now, like I said, since probably 2005. I've been on the ground since 2007. But we've only been up and running as a commercial bank for these 5 years, which is, I think, where our brand has gotten to be better known.
Mm-hmm. So you guys are kind of thought of as the bank for startups. Mm-hmm. Does SVB have any startup or VC customers that people might be familiar with?
Sure. So working with startups is a hugely important part of what we do, but it's not the only part. So Silicon Valley Bank, we are laser focused on working with innovation businesses, but those could be startups, quite early stage businesses, but also through to public and private corporate. So our remit is innovation, but we're very much stage agnostic. And our goal really is to work with those startups from a really early stage and help them through every stage of growth. So if we're doing our jobs right, hopefully they're staying with us through pre and post IPO or potentially through exit. The other part of our business, as you said, is absolutely working with the venture capital and private equity funds as well. And so we've got an amazing list of clients, funds like Notion and Felix Capital, Highland and Mayfair. So you can see it spans, early stage funds through to growth capital and PE. And then some of the clients that we work with, again, I feel really fortunate in some of our clients. Well, actually, all of our clients. It's such a high quality group of companies. But businesses like World Remit and Asimo and Brandwatch, Made.com. So it's a really, again, broad remit of innovation and life cycle as well.
Mm-hmm. So what is it about a bank, your bank in particular, that makes you specialists in innovation or innovation-related businesses?
Sure. Well, it helps that it's all that we do, right? So we are 100% focused, like I said, on innovation and venture capital and private equity. And what that's allowed us to do is really get to know the subsectors in a more detailed way. So we go pretty deep in terms of the type of information and diligence that we look for from our companies, the network that we've been able to build and create, and really particularly important is leverage over time to help our clients be successful. So I think it's that laser focus on one industry that we don't kind of dip in and dip out. We're 100% focused on that sector that's allowed us to be really that long-term partner for our clients. Yeah.
I think actually this is an interesting point to go a bit deeper on, because I think broadly kind of across society, maybe people think about their bank either from a retail or a business standpoint as effectively someone that keeps their money safe and maybe provides them some credit. And okay, that's great. And I suppose they're providing those two services. But as new challenger banks, for instance, come to market looking to kind of rethink the role that banks play in society, it's really about questioning, do we just hold people's money and lend them funds when they need them in exchange for interest payments? Or is there actually more that we can do to support either the ecosystem or the network or make introduction? How can we actually ensure the success of those businesses or help them operate better over and above simply storing their money and making loans?
Yeah, I mean, that's a hugely important thing and something that Silicon Valley Bank takes really seriously, right? So helping to build the ecosystem. And I'm hopeful that people look at Silicon Valley Bank in the UK and see us play a role in convening and around influencing and adding value within the subsectors. And I think taking deposits, right? Being a bank is kind of the bare minimum, right? It's the hygiene factor. And we tend to lend money earlier than most other banks because we understand the subsector and are comfortable with what I would say real versus perceived risks. But I think really, why do clients bank with Silicon Valley Bank? And if it's not us, then why should you be thinking about choosing a banking partner? And it's really about the other things, right? The value add. So is it helping companies expand geographically? So, obviously we've got 28 offices in the U.S., but 60 to 70% of our portfolio base either wants to set up shop in the U.S. or is thinking about it or actually has a presence there. So that's a huge part of how we help. But really, it's again, going back to leveraging that network to help our clients be successful. So whether that's an introduction to a source of talent or a source of capital or events and thought leadership. So we've announced just released our state of the market report, which is a really good barometer of what's happening in the ecosystem. We hosted the launch of the Fintech 50 at our offices. We just did an event on PSD2, which isn't the sexiest of topics, but it's coming. The deadline is coming really quick. So it's about how do you go above and beyond banking to add value to your clients, and that's something that we think about all the time.
Yeah. Okay, so for you guys, it sounds like tangibly there are kind of research analysis providing content which helps your businesses do their work better. Part of it is organizing events which similarly have almost an educational component as well as a networking component.
Right.
And then it's actually making introductions, either investors to companies or companies to talent when they're hiring.
Absolutely. Or sometimes companies to companies, right? So how do we bring together relevant people in any particular subsector, and whether that's partnerships, or sometimes what we find is our CEOs and CFOs really just want to talk to somebody who's been there and done that, or maybe going through the same issues. So it's really, again, convening people to help them figure out what are those issues or problems they're trying to solve for, or look at co-opportunities as well.
Tell us a bit more about your interest in fintech specifically.
Sure. Well, I mean, because we're focused across the board on innovation, fintech obviously plays a pretty big role in that. And of course, being in London, we have a large and vibrant fintech ecosystem. And I would say there's really three kind of components of our interest. So again, it's being a partner to, whether it be banking or lending, to the fintech companies themselves. And that spans everything from payments and remittance businesses, alternative lenders, capital markets, software, reg tech, you name it. So we're interested across the piece in those sectors. The second would be really about how do we utilize fintech, right? We're a bank ourselves, so we need to be thinking about how do we become more efficient in the way that we work with our companies? How do we navigate what is a really dynamic and fast-changing regulatory landscape? And so it's partnering with fintech companies as well. And I think it's just, again, it goes back to a lot of fintech companies still depend on banks. And so we don't have a huge retail component to Silicon Valley Bank. And so we are usually less competitive with a lot of the fintech companies that come through our door. So our vision at Silicon Valley Bank is to be the bank that power fintech as opposed to compete with it.
It must be interesting given the way you kind of act to an extent, I suppose, on both sides of that relationship with a fintech. So you're a potential customer, and you're also either a potential lender or certainly a service provider. I think one of the biggest challenges that a lot of fintechs face when it comes to selling to incumbent banks is navigating the procurement process, moving from a proof of concept to a longer term relationship. Do you find that you guys internally are structured well to respond quickly, bring potential suppliers on, treat them correctly, make fast decisions, and trial stuff in interesting ways?
Well, I'd like to say yes, but there's always room for improvement, that's for sure. So I think what you get differently from Silicon Valley Bank is everyone you speak to is 100% focused on helping innovation businesses. So there tends to be a really good understanding of the issues and the companies. But we are a pretty large bank ourselves, so I'm sure that there is some room for improvement on the efficiency side and procurement side. But we do try our best, and we're pretty good about listening to feedback as well.
How do you support your smaller customers? So I don't know if it's a startup with 5 to 10 employees.
Yeah.
I mean, are they presumably they're running some expenses through their commercial account here with Silicon Valley Bank, but would you lend to a company like that? I mean, do companies need to meet certain kind of threshold criteria in order to be potential borrowers?
Sure. So on our early stage portfolio, there definitely are some companies that we would look at and feel comfortable extending credit or lending products to. I would say what we try to do at the early stage is be really disciplined about not replacing equity with debt. Right, because that will get us in trouble, it'll get the company in trouble. So we're really trying to look at those businesses and find the few that are startups that we can help supplement what is probably the equity story with some level of debt. I guess the other thing I would say is there's a whole bunch of different ways, a variety of different ways that we help those companies outside of lending. And just to be clear, we feel very, very comfortable lending into burning cash flow negative businesses. It's something that we do every day. The vast majority of my portfolio are cash flow negative businesses. But when they are really, really early stage opportunities, we find it's more appropriate to fund those businesses via equity, and then we'll supplement with debt. But the ways that we look at the vast majority of those companies is what can we do to support them from an ecosystem perspective? Then it comes down to it's not a one-size-fits-all approach. Some companies really want to work with Silicon Valley Bank because they are going to the U.S. and they need to get accounts set up, they need introductions, they need a soft landing. So we're really good at helping on that side. And then the second part is really around those introductions again. So we'll do a ton of events, talking multiple events on a monthly basis around bringing people together. So we'll go usually by subsector to make it more relevant for everyone, where we'll bring together a group of early stage entrepreneurs, a group of investors, and hopefully by putting those interesting people in a room, interesting things will happen. And then the other thing that we do is a lot of pitch events. And so we have one coming up that's focused on AI. And so we'll get 5 to 10 of our clients pitching in front of a room of investors, key influencers, corporates in the market, so we can look at partnerships. So it's, again, I think for that early stage community, it's not a one-size-fits-all approach, but it's about adding the value add that comes outside of just the day-to-day banking.
How does the London tech scene compare to what you've seen elsewhere?
So I've been in the market now for 10 years, and I have to say it's unbelievul what has been
10
built.
years here in London.
So I came over in October 2007 into London, and it is absolutely amazing to see how much the ecosystem has matured, has come together. It's absolutely thriving, and that's really exciting to see because I think it's just getting started too, which is the other part that's hugely exciting in terms of the quality of companies that we're seeing being produced, the sophistication of investors, the interest outside of the UK, not just from Europe, but from China, from the US, et cetera. So it's really hugely exciting what's been built here over the last 10 plus years. And I guess what's different, well, I think each market has its own unique characteristics and traits, and whether it be London or Edinburgh or San Francisco or New York, I think each one of those markets has unique attributes that make it exciting. And I think the great thing about London is such a diverse base of individuals, of people that that you can look to from a talent perspective. There's a lot of money available to companies in terms of if they are looking to fundraise, and a lot of excitement around fintech and retail tech, security, cyber. So it feels to me that there's all the ingredients for London and really the UK in general to continue to go from strength to strength.
Can you tell us any stories about where Silicon Valley Bank has added specific value? I don't know, any unique outcomes that you guys have created through your model, whether it's in the UK or in the US? Sure.
So I think one good example that I can share is for a company called Brandwatch. And they are an enterprise software business focused on data analytics, social media monitoring. It's a fantastic business based in Brighton. And we've been working with that business for a number of years and actually helped to introduce them to the fund that came on to lead their Series A round of financing. And we've been working with them on the banking and debt financing side, helped to make that introduction. They've gone from strength to strength, and then we also introduced them to their Series C lead. And so I think that's a really good example of us taking what is a long-term partnership approach, really getting to know a business, and then where we can, making those introductions to relevant parties.
Any U.S. examples of note?
Absolutely. So we, over the last number of years, have been partnering with MasterCard to create an accelerator called Commerce Innovated. And we've just closed out our sixth class. So we are actively engaging within the community from that perspective as well, which is really exciting.
What advice would you have for a fintech entrepreneur?
Well, it's a tough one, but I would say one of the things that we find more often than we would like to see is our fintech entrepreneurs probably underestimating the regulatory landscape. And I guess what I mean by that is the time and resource it takes to build a really solid infrastructure and a really solid, I would say, platform that will continue to scale with their business as they're growing really, really quickly is important. And it takes a lot of time and money and resource. And I think that we see that sometimes under-prioritized too early. And so we get a lot of fintech companies that come through our door, and it even makes it hard for us to bank them if they don't have a robust AML or KYC or regulatory framework in place. So I would say don't underestimate the need to get that right quickly. But I guess on the positive side is we continue to see a ton of interest, both in terms of local UK funds and our US venture capital and private equity firms that really want to work with really high quality fintech businesses. So it still feels like a really positive time to be building a fintech business in the UK, growing one, and accessing capital.
Erin, what's the best way for people to find out more about your work and connect with you directly?
Sure. Well, feel free to connect with me on LinkedIn, email me directly at eplatts@svb.com, or you can always go through our Silicon Valley Bank website, svb.com.
Great. Erin Platts, thank you very much for joining us today.
Thank you so much for having me.
Kristi, welcome to Rebank.
Hi, thanks for having me.
I understand you have a specific focus on fintech at SVB. What does that mean in practice?
Yeah, so we've been working with fintech companies for a long time, but obviously London, there's a lot going on here. So we've put together a group that focuses on fintech kind of across all the life stages, but really making sure that we understand the landscape. Regulatory is a big, regulation's a big issue. All the trends going on, and it's a small community, so we wanted to make sure we were connected. So we cover banking and lending and networking and kind of the whole spectrum of what we bring to our clients.
Okay, so there's that team within, I guess, SVB that focuses on fintech across those areas. So you talked about developing regulatory expertise. What does that mean? You guys would try to understand the way Fintech is regulated so you can either support or make better credit decisions?
A little bit of both. I'll never be the expert. We have a whole team of people internally at SVB that do that as well. But we need to understand how it impacts our clients so that we can get the right partners in the room for them, host the right events to make sure that they're up to speed on what's going on and what's going to be affecting them. But they're experts in it as well. But a lot of times there's questions, and a lot of what we try to do is make sure that we're getting the right resources to them. People who've either been through it or struggled with it or succeeded or maybe didn't succeed, to get them the experience and the conversations that will help them, as they're growing.
Mm-hmm. How compelling is Fintech in your view in the context of the broader tech sector?
Well, I find it really exciting, but that might be cheating because that's what I do. I think when you think about consumers, you think about companies, financial services are core to what everybody's doing. So if there's a way to make it easier, break down the walls for people to do business, make sure it's on your mobile, you don't have to be sitting at your desk, breaking down borders. I think that it's really exciting, and I think as a sector, it affects most people in some way.
We're seeing an increasing number of large investment rounds being closed in the US and Europe. Should we expect more of that to come?
I think it will continue. I think investors are still raising funds. I think you look at, again, Fintech touches a lot of people. And so I think it's an interesting sector. I think regulation continues to increase and people have to solve these problems. The world is getting smaller through some of the technology. And so I think that is interesting for investors. I think London's a hub for it. So we'll continue to see U.S. investors coming over here. And some of the rounds, they have been going up. I think valuations have been interesting, but I think stabilizing a bit, it seems. But we're excited about it. I think that there is money in this space, and it'll continue, at least for the foreseeable future.
Mm-hmm. I guess we've seen large rounds specifically in things like B2B payments, some other B2B propositions, some lending. Prodigy Finance recently, maybe just this week or last, announced a big round lending to foreign students who've been accepted to top universities. I mean, are there particular areas within Fintech that you expect to kind of outgrow others?
It's interesting. I think we're seeing a lot of trends. I think anywhere where it's making it easier for the consumer to get some kind of financial product, there's a lot of focus on that. I think you think about Prodigy Financial, you think about the Revoluts, the Monzos of the world. I think it's an interesting space. People know about it, and it's exciting. It's just changing fundamentally how people can do business and how they have access. So I think that will continue to grow. And I think RegTech, because it's critical to all of this, that will continue to grow. I think one of the newer hot topics is around InsurTech. I don't know as much about it yet, but lots of people are talking about it. And so I think some of those where they've been historically much more traditional, less digital businesses, and they can bring them online and use the technology, again, I've talked about multiple times, but making it easier for people to get access. I think those are the areas there's going to be a lot of focus.
Your day job is talking to SVB customers, right?
Yeah.
What are some of the more common conversations you're having with Fintech businesses at the moment? I mean, what are they thinking about? I suppose primarily from a banking and financing standpoint.
It's a good question. And again, I think it differs a bit around what kind of business it is. So if it's more of a software, SaaS type play, it's still around the metrics, customer acquisition, sales and marketing, bringing on customers in different jurisdictions, proving out the model as they're kind of going more global. And then how do you fund that? When do you use equity versus debt? And what kind of debt products do you use? I think you go into some of the more payment side of the business. So some of these remittance businesses that are moving money all around the world, a lot of it's about the banking infrastructure. Obviously, they're heavily dependent on, that infrastructure to be able to move the money into places that haven't historically been as easily connected. So there, a lot more of it's on the banking side. But again, how do you fund some of those big working capital cycles as money is moving around? So again, there's a spectrum in terms of how we're looking at the businesses and what they need to continue to operate.
And so how do those conversations then generally develop? Is it, all right, business X is thinking about raising money, does it tend to be from, I don't know, traditional VCs? Does it tend to be from a strategic investor, which might kind of lead longer term to a trade sale? Is it, I don't know, tapping public markets via an IPO?
So I think it's a mix of all of those things. Depends a lot on where the business is. So I think if they're proving out the model and there's a little bit more risk in terms of the outcome, I think a lot of companies are looking at VC money, bringing in partners who have specialization in some of the things that they're doing. I think strategic has been a bigger part of the funding landscape in the last few years, and we're seeing companies doing that often a little bit later stage and trying to either add product capability or, again, geographic expansion, where some of those strategic partners will have access or connections in the market. So we're seeing a mix, and even in some cases a bit of both, so some strategic and some VC money coming in on a pretty regular basis.
And what are you guys at SVB able to do in terms of providing funding to the business customers you work with? I guess there's the kind of the VC introduction piece, maybe for some early stage pure equity, and you guys are lending to early stage businesses as well. I mean, can you walk us through what those look like?
Sure. So I think on some of the softer side, the things you're talking about, a big part of what we try to do is connect people. So host events, partner with other people, but really get the right people in the room to have conversations about what's relevant to our clients and to the community. It's not just our clients. Obviously, there's lots of people out there that can get together and change the way business is being done. On the lending side and the banking side, so we do everything from really early stage. So we do banking and then venture debt as the company is growing, layering on working capital finance.
What's venture debt?
So a couple of different use cases, but generally it would we'd look at providing a piece of term debt in conjunction with an equity round. So looking to extend the cash runway for the businesses. So if say an investor is coming in and putting in a slug of equity, and there's often a discussion around layering on a piece of debt on top of that. And then, I think venture debt is an often for initial phase for us to get involved on the debt side. But as the company grows, there's other ways to leverage, the assets of the business, cheaper cost of capital, more flexible in some ways. Venture debt tends to be fairly flexible with no financial covenants. But as the business can predict financial metrics a little bit better or is more comfortable with that, we often rely on working capital financing. And then as we get later stage, we're looking at kind of growth capital, mezz, and then later stage, we do corporate traditional debt finance, sponsor finance, leverage buyout transactions, sort of the whole range of debt products within the innovation economy.
So does the debt for cash flow negative companies tend to be, is it almost bridging equity rounds? And are they, raising equity to pay interest and principal repayments on debt until they raise again and raise new debt? How does that kind of dynamic work over time?
So I think we look at debt, most lenders will look at debt, there's several ways of repayment. It's either liquidity, so often balance sheet metrics, or then cash flow. So obviously if there's not cash flow, we're much more dependent on liquidity in the business or assets to support, near-term liquidity in the business. So venture debt, I guess you could look at it in a way. We don't call it bridging. Usually we're looking at the plan, equities coming in. What does the company need over a period of time? A common use is that there are certain milestones that the company is looking to get, which would increase the valuation substantially for the next round. So it's all about the analysis around, what amount of money do they need today to help them, and what key metrics do they need to hit to feel that they'll get that increase in valuation. So it's a common use of the venture debt product. We're not usually putting money in right as they're about to run out of cash. It's a hard point, to get everybody comfortable. So we're usually doing it much earlier in the process, but working very closely with the management teams and the investors and figuring out what's the right level of debt for what they're all trying to do.
Mm-hmm. Okay, so I can imagine how that plays out when things go precisely to plan. When things don't necessarily go well, either, company doesn't hit those milestones, or they're not, maybe the funding market kind of slows down a little bit. then what happens? How supportive are you guys able to be, and how effectively do you preserve the capital that you've lent to the businesses, and to the extent possible support those businesses in going forward?
So I think for any business, it's probably pretty difficult to project exactly where we're going to be 12, 18, 24 months. So I think if a company were to exactly hit their plan, every kind of metric, we'd all be surprised. I think often they're ahead in some areas and behind in others, depending on what's changed in the business, what opportunities happen. So it's pretty common for us to sort of take the initial plan, everybody gets comfortable, and then there are versions of it as the company's growing. So I think we're very much relationship focused. I think we look at investors as a long-term partnership. We look at management teams as a long-term partnership. Whether you're successful or not in your current company, it's likely you'll go on to do something else. And so we're very much we want to be a long-term relationship partner. So we want to be as supportive as we possibly can. So, and it depends on the situation. If the investors are, putting in some additional funding to help bridge, whatever the change from the initial plan is, we're usually able to be quite flexible to support kind of the revision in the plan. So that's probably what happens most, is we all sort of sit back around the table and talk about, okay, here's what's going on today, and how do we relook at what's the best plan for the new future.
Mm-hmm. That's interesting, and I guess that's kind of the way it has to work, because, I don't know, if a company has a debt maturity coming up and they have to pay back £2 million, which they don't have, turning around to their VCs and saying, we need £2 million to repay our debt, and then we'll be in kind of an equally bad financial position from before in terms of cash on hand, isn't going to work, right? Because the VC is not going to put the money in. Defaulted on debt, VC loses their investment, and the company doesn't move forward. So as a result, I suppose what you're saying makes perfect sense. Everyone sits down and thinks about, I suppose, how to call it share the pain, but how to kind of participate in a medium-term pivot back toward where that business was expecting to be.
Yeah, I think in most cases, there's always exceptions, it's in no one's best interest to just call it a day and be done. So I think our philosophy is to always try to work with everybody involved to get the best outcome. But that varies widely depending on what the situation is and why we've ended up in the spot that we are. But it's a lot of it for us is we're having those conversations early and regularly. So, there may not be a financial covenant, but that doesn't mean that we're not sitting down every month talking about what KPIs is your board tracking you to, and where are you meeting them and where are you not. And so it's not often that we're getting to that last minute out of cash moment and we haven't been having those conversations all the way through. I think as a lender, you need to do that, and I think as a management team and an investor, an investor syndicate, there's often multiple people. It's just a better relationship. It's a better outcome if you're able to do that all the way through. Mm-hmm. And it's not always bad news. It's good news as well. We may be looking at what the facility is if things aren't quite on track, but if it's also going better, it's an opportunity to sit down and say, okay, you've met these milestones much sooner than we all thought. Is this still the right debt product? Do we need to shift? Do we need to think about something else longer term to make sure that we're scaling with the business?
So it sounds like you guys are effectively bearing some equity-like risk by lending to these early-stage companies. Are there equity links to the loans you guys are making? Are there, warrants, or is there equity upside involved as well?
Venture debt in general would have some kind of warrant component, and so I think most of the players in the market would have that component to the debt, and we definitely do in the cases where it's leaning more towards that equity risk side than traditional cash flow type lending.
And otherwise, do the loans tend to be? Is it interest only during the life of the loan? Is it interest and principal paid back all at maturity? What's the general structure?
So it's quite a wide range, and we do everything from more traditional, so 36-month monthly amortization, to interest-only periods, draw periods. So it really depends on the situation, what the company is after, what the goals are of the business. And we don't have sort of a one structure for every business. We like to sit down, understand the pain points, understand what they're trying to achieve. Again, understanding what the board and the management team are tracking in terms of success, and then try to structure something around that. So it can be all over the place in terms of the nuances of the repayment, interest, all of those pieces.
And is the ideal borrower or the businesses that you guys tend to work for? Is it, I don't know, the vision and 10-year plan and opportunity to really hit it big that makes a business you guys can lend to? Is it someone that's looking to develop tangible assets and do a cash flow positive business in the very short term that makes someone a credible borrower?
So I think it's a little bit of all of the above. I think probably we really buy into the vision of the business. It doesn't necessarily mean 10 years. Sometimes they are much shorter in terms of what someone's trying to do. But we get excited about disruptive businesses. And so it can be a wide range of what we're looking at. So it could be someone who's very early stage with an idea, they've raised some money, and we want to partner with them. So it's much more in the idea phase. I think you go all the way to the late stage corporate, and it's all about let's get scalability, cash flow as soon as possible, or then after that even, in terms of then expansion. And so it depends what life stage you're looking at. It depends what technology, what kind of part of the innovation sector you're looking at on what's going to get us excited.
And I suppose in terms of the reasons that a startup or early stage businesses might seek debt, it could be anything from funding their day-to-day business expenses to purchasing companies to developing assets which they'll eventually purchase for cash. I mean, does it kind of span the spectrum?
Yeah, the initial funding requests are big. I mean, obviously, when you're building a business, you're hiring people. Sales and marketing is really important. You get your big first contract, and you have to deliver, but you may not have, the working capital finance to support that. So, the needs of early stage businesses are quite varied. The debt products are quite varied. Again, really early stage, often it makes more sense to bring in equity to help sort of, you don't want to over-lever your business too soon. But yeah, so we often get involved when there's expansion, whether it's product development or geographic expansion. And then again, as you start generating revenue, there becomes the ability to leverage some of those receivables to get even additional financing to continue to get out there and sell the business while you're also delivering on the contracts you've already signed up.
What advice would you have for fintech founders as it relates to funding their businesses?
I think the big thing would be to get out there and talk to people, talk to all different kinds of funding sources, talk to banks, talk to non-banks, talk to people who've done it before. People have had good experiences, they've had bad experiences, and so you can always learn from someone else. Get that network, get a network together of people want to share what they've learned. They want to help other people. Even competitors are want to help each other. I think, especially in the fintech space, there's a big community that seems to be working together in a lot of ways. So just explore, ask lots of questions. I think you can always come to someone like us and we'll just walk you through debt options and what does it mean to take venture debt and what does it mean to take receivables financing and when do you think about it. And on the equity side, finding a good partner, money is important, but someone who can bring something to your table that you either don't have, that you need to explore. I think finding the right partner from a financing perspective, whether it is strategic, whether it's a more traditional VC or whether it's a bank, is really going to help you grow and scale in the longer term.
Are there any, specific customers that you can talk about that you feel like you've done a particularly good job in supporting in the fintech space?
So I get excited about all the companies we work with. I think there's a few good stories, names that are probably a bit familiar with people. World Remit is a great example of a company that's taking down barriers around the globe in terms of money. I mean, think anyone who's moved money in the past, whether it's to the U.S., to one of the many countries in Africa that World Remit is supporting, I think it makes life easier. And so I think it's a great story of taking what has been a traditional bank service and making it more accessible. Again, making the world feel like a smaller place because it's easier to move money around. You get companies like Property Partner who've taken a pretty traditional industry in terms of investing into real estate and have made it accessible for people who may have been priced out investing in a single home, but now can log onto a platform and make a smaller piece of an investment into a property and still manage an investment portfolio.
Looking back 20 years from now, which parts of fintech do you think will have been most impactful?
I think it's changing so quickly, it's hard to predict 20 years. I still think reg tech is going to be a big component. I think regulation's getting complex, it's moving quickly, and companies struggle to keep up with it. So I think people who can continue to make that easier will be very relevant over the next 20 years while the world is changing and shifting. I think making banking services available to everyone instead of people with a bank card or can walk into a brick and mortar bank quite easily. I think those are going to be huge, and it's going to change. You look at the Revoluts, the Monzos of the world. It's fundamentally changing how people conduct their banking. You now have this phone in your pocket that you can manage all of your money. 20 years ago, that just wasn't even possible. So, and it's going to be fascinating. The rate of change is so great that I imagine what's going to be happening in 20 years we can't even imagine today. So it'll be exciting to look back and see what all that's turned into.
All right. What's the best way for people to get in touch with you and find out more about your work?
So there's a couple ways to get a hold of us. I think you can always go to the svb.com website and fill out an inquiries form. We're on Twitter, we're on LinkedIn. You can also contact me directly at koliver@svb.com.
All right. Kristi Oliver, thank you very much for joining us today.
Great. Thank you very much.
Thanks for tuning into Rebank. If you like today's show, reach out. Follow us on Twitter at Rebank Podcast and join the conversation. For more on banking, fintech, and the future, check out our regular content at www.bankingthefuture.com.